My name is Jeffrey Nicholas. I'm an Associate Professor of Philosophy at Providence College. This is a lecture on After Capitalism, Chapter 2, Justifying Capitalism, which is written by David Schweikart. This is part 2 of this lecture, so there is a part 1 lecture, obviously, which you can view before you view this one, and I recommend doing that, of course. In the first lecture, we went over Schweikart's opening question, which is, what justifies the capitalists owning so much? We talked about what an economic structure was, and then we looked at the 3 features of capitalism. And then we looked at the argument that the capitalist wealth is justified by marginal product and some problems with that argument. In this lecture, lecture 2, we're going to look at the argument that the entrepreneur provides something to capitalism and deserves wealth. We'll also look at the arguments that the capitalist takes risk and deserves reward. We'll look at utility deferred as an argument, and then we'll look at the claim that there is no alternative to capitalism. And we'll end with a few questions about Schweikart's presentation and argument overall. So to begin, we want to talk about the entrepreneur and why this idea justifies presumably the distribution of wealth and the capitalist having more money than everyone else. So clearly, the entrepreneur makes a contribution, right? People need the entrepreneur because they come up with ideas and they develop ways for thinking about how to make money, how to produce new products, and how to add to the system. So Schweikart says that even socialists need entrepreneurs. So in our new society, with the successor system, we will in fact need entrepreneurs just as much as does the capitalists. And what is specifically interesting about the entrepreneur is that this person is the agent who brings together the land, labor, and capital, which we talked about in the first lecture, paying to the owners of each the market rate of rent, wages, and interest. So, of course, the person with the land pays rent, or we have to pay rent for the land. We pay wages towards those who work, and then there is the interest into the market for the capital. Here, of course, we're making the distinction between the profit that goes to the entrepreneur and the profit that goes, or the interest that goes to capital itself. So remember, we began this conversation with the question, where does capital come from? What is the role of capital? And how does it justify this sort of wild distribution between the capitalists and the working class? But if we distinguish between the profit that goes to the entrepreneur and the interest on capital, then we have to raise the question about whether that actually answers our original question. So profit, again, remains an important category under the socialist system, according to Schweikart. And we will look at that as we go through the text and think about where profit fits in as a motivator under a socialist system. But then we still ask the question, how does this profit justify a flow of income to capitalists simply by ownership of land or by ownership of financial assets? And the argument that the entrepreneur makes this justified becomes questionable because we can distinguish between the profit that goes to the entrepreneur and the interest on capital itself. This leads us to another argument called the risk and reward argument. And here, capitalism is justified, so this argument goes, because the capitalist puts his or her money at risk. So in any venture, money is required, and when we put that money up to build a new pumpkin pie factory, for instance, then the money is at risk. Maybe there are too many pumpkin pie factories, or maybe people are not interested in eating pumpkin pie anymore. Maybe instead they want to eat strawberry rhubarb pie, or for whatever reason, the money is put at risk. But of course, the first response to this is that capitalism does not reward in proportion to risk. If it did, the riskier investment would in fact earn or deserve more return on the investment. So in a failed investment, it would presume that the government would have to pay back the investment of the capitalist. But of course, that's not what happens. That is not what we expect to happen. So the risk and reward really doesn't defend at an initial level the idea that the capitalist deserves the wealth that he or she gets from a risky venture. But that's not the end of the argument, because some people will argue that on purely procedural grounds, the results are justified in this distribution. So when we talk about procedural justice, what we're talking about is a procedure that identifies the steps that end in a certain result. So we can think about, for example, a system that distributes money according to a particular procedure where people have to step in line, and as long as people step in this line, they get a certain amount of money. That would be one procedure. So the risk and reward of capitalism is a procedure that gives certain results. And because it is a procedure, it seems to be just because it does not favor any particular one. But of course, there are problems with this argument as well. The first problem is that everyone cannot participate in this procedure. So the capitalists might argue that no one is legally prevented from participating in the market and in making money. But in fact, that's not true. For many, they simply do not have the wealth to participate. But there's also the fact that people are unequally situated, and that, in fact, the rules of the economic system might prevent some people from participating in the market. And so a response comes from the capitalists that small investors can, in fact, invest in mutual funds and make some sort of profit that way. And of course, that is true, but it still continues this question about whether the a large difference in inequality between the small investor and the large investor is, in fact, promoted on these pure procedural grounds, and it still does not answer the fact that some people simply cannot participate in the market. So another way of thinking about the procedure of the capitalist investment is that capitalism is itself a positive sum game. So to understand this argument, we have to distinguish between the positive sum, the zero sum, and the negative sum game. And you've probably heard these terms before, but let's just go through them briefly. So a positive sum game is the idea that the total expected from playing the game, computed according to probability theory, is positive. So in fact, in this system, more money is won than is lost. A zero-sum game is one where the total expected from playing is equal to the total loss. So throughout the whole game with all players, just as much money is won as is lost. And then finally, the negative sum is the idea that the expected gain is negative. And here, of course, gambling is the primary example. The house always wins, and so more money is lost in a gambling house than is won. Now, many people will argue that capitalism is, in fact, a positive sum game, and we can see, for example, by a growing stock market, and for most parts, the stock market is always growing except during crises, that more money is generated than is put into the market. Now, if this is true, it does raise, of course, the initial question about those who are excluded. If capitalism is a positive sum game, then those who are excluded are at a severe disadvantage, and there are many people, of course, who are excluded. So it doesn't really get rid of the moral problem of the capitalist distribution that we were talking about. But Schweikert wants to raise a question. Is capitalism really a positive sum? Does it produce or generate more money than is lost? And so one way that we might think about this is property income, which always seems to increase, except during times of crisis. It always seems to be a positive increase. But if it is a positive increase, if more money is generated than is lost, then we have to ask the question, where does that money come from, right? And so the point of participating in some kind of investment is to generate money. And the question then becomes is where does that money come from? And here's where the concept of surplus value plays a role in our analysis. So the idea here is that a worker works for a certain number of hours a day, and they are paid a certain amount of money per hour so that they get a certain amount at the end of the day or the end of the week. But that the goods that they produce are worth more than what they are paid, right? And so therefore there is more wealth, worth generated over what the individual laborer is paid. Now the question is, where does that wealth come from? Well, the only place that it can come from is that of the laborer. Now, if that's true, then the distribution of wealth becomes unjust because the money that is generated in the investment game is coming from those who have labored and not from those who are putting money into the game. So what might be some reasons for the investment game that we can think of that would sort of justify this kind of situation? Well, one reason to play the investment game is that it fosters entrepreneurial activity, right? We need people who are going to bring money and land together and who are going to bring labor together. And this I'm sorry, I said bringing money together, but that's not what I mean to say. I mean to say the entrepreneur brings labor power to the idea, to the factory, but that does not necessarily require money. Okay, so one reason for investment is that it increases the ingenuity spirit of people, but in fact, money is not necessary for that, and we can do it through other means. Okay. So what happens here is one gets something for nothing while others get nothing for something. And Schweikert writes that those who produce the goods and services of society are paid less than the values of the goods and services they produce. So profit derives from this surplus value that we saw that results from the laborer working and not getting paid equal to what they introduce. So then we can ask, does the secondary goal, providing a reward for risk, satisfy the first goal, encouraging entrepreneurial activity? And if it does not, then the secondary goal simply isn't worth keeping in society. So even if the game is unfair, it might serve an important function, and that's one of the questions that we have to ask. And what Schweikert's argument is that it does not serve the primary function of encouraging entrepreneurial activity. And so it's a noble lie. The standard belief of economics is that savings leads to investment, that leads to growth. But what we saw in history and Keynes, the economist's primary idea is that in fact it's investment that leads to growth, that leads to savings. And so what led to the Great Depression and even the Great Recession was not the lack of investment, but the too much savings. So business credit is healthy for a healthy economy, but savings, in fact, are not. And what we need is more of that money put back into the market. So the key to a healthy economy is, in fact, effective demand, not savings and investment. And we've seen that in history, even most recently in the United States. Still, one could argue, as many have done, that there is no alternative to capitalism, that any attempt at fundamentally altering the basic institutions, as opposed to softening their rough edges, actually kills the goose that is laying the golden eggs, that it, in fact, decreases the possibility of producing the goods in the way that we do. And so we have to consider that possibility. And Schweikert's argument through the rest of the book is that, in fact, we can see that there are alternatives. So some questions we might want to lay out here are about the three features of capitalism, and in fact whether those are the three features of capitalism, or whether all of them need to be present for the system to be capitalist. We also might want to ask about the many arguments based on facts that Schweikert gives throughout the text, and I encourage you to look up those facts and look up the evidence and make your own judgment about that. And then finally, we have to talk about the underlying system itself and whether it is as unjust and terrifying as Schweikert makes it out to be. Thank you for listening.